Let us look at how to do an income statement. So this is the format. One thing you need to know that income statement was formerly known as profit and loss account. So let me do the format. We can have the name of the business, ABC Limited. That is the name of the business. Then we have this income statement. What follows in the second line is the name of the financial statement, which is income statement. So when you are doing an income statement, you start with the name of the business. The next line, you go to the name of the financial statement. The third line, you talk about time frame. And this one we say for the year. For the year ended. Can talk about December 31st that year. So we'll do the 3 column first. So we have this format. Here you write the currency. For instance, I can assume it's in Kenya shillings, and I can put to me those 3 notes, zeros there to mean my figures are in thousands. So this is the format. With income statement, which was previously called profit and loss, it was actually called trading profit and loss account. Why? Because it records trading activities. The main purpose is to determine if a business is making profit or is making losses from its trading activities. These trading activities is buying and selling of goods. Then we also look at the other expenses incurred in the process of buying and selling. So to do so, we must analyze incomes or the cost of goods sold against expenses. So how do we get incomes? Incomes, we get them using sales. So for us to start with that one, here we start with the sales. And sales figure or amount is posted here. Normally is a huge figure. When you sell goods, some goods are returned to you. So if you had sold goods worth 1 million and goods have been returned to you worth 10,000, it means your actual sales is actually 990,000. So the goods that are returned are called return inwards. So these goods returned, you must minus them. So we less sales return, or what we call return inward. So that one you minus. Sometimes customers might have ordered goods, and these goods have not been, the order has not been confirmed by the end of the year. The orders that have not been confirmed, we call them unrealized sales. So we shall also minus unrealized sales. The orders the customers have placed, but they have not yet confirmed. After taking this minus this, you get what we call actual sales or net sales. This is net sales is actually what you have sold, is the actual. Net, it refers to the actual, what you have actually sold. From there we get what we call cost of goods sold. Okay, so we now compute cost of goods sold. To compute cost of goods sold, we start with opening stock. opening stock is posted here. Then we plus purchases. The purchases is posted on this column. Why? Because we will make some adjustments. After you purchase goods from your suppliers, you can return some goods. So we minus what was returned, less return outwards. We can start with purchase returns. We minus what was returned, which is purchase returns, or what we can also call return outwards. So I will minus this. Purchases is normally a big figure, so I write it in 3x's. 2x will mean smaller figure. This is a big one. So I minus what was actually returned by our customers. Sometimes we also have drawings, whereby you purchase the goods and these goods were taken by the owner. You also minus them at this point. After you have gotten purchases, you minus what you call, here you get the net purchase, this minus this, what you get is net purchase. You can post it there. Instead of posting it down here, I post it parallel to this line, to this last figure here. I put a line here to show this minus this, what I get, I've carried it forward to the next column. You can see when if I was to draw a line, that would fall under that category. You don't need to put the dots. Someone can see, once you put this line, it means after working out this, what you get is here. Instead of putting here, I can put it up here. In other places, sometimes you can also just do this, put it here, and again, post the same figure here. Parallel. But this will waste space. To avoid wasting space, draw this line, post the figure here. The figure for purchases. We also minus closing stock, less closing stock. But before closing stock, the costs that you incur to carry goods. For instance, if you go to town, you buy a laptop at $200. This is the purchase price. Then you are charged transport of $40 or 40 shillings. It means the actual cost of this laptop is actually 240,000. It is not 200. What am I saying? The cost you incur to carry goods is part of its purchase price. So we add what we call purchase, carriage inwards, which is the cost incurred to carry your goods. Then we minus closing stock. Any figure in bracket means it's a minus. This plus this minus this. What you get is what we call cost of goods sold. And this one I carry it the same here. I take this minus this, what I get here is gross profit. We shall be doing an example in the next lesson, and you shall be able to see the next video, and you shall be able to see this. What am I saying here? I'm saying this. Closing stock you minus in order to know how much you sold. For instance, if you purchased, if in the morning you purchased around 10 laptops. But in the evening you are remaining with 8. How many have you sold? It simply means what was sold was actually 2. So the goods sold was 2. That is why you can see in the morning you had 10 laptops. In the evening you are remaining with 8 laptops. How many laptops have you sold? You take 10 minus 8, you know you sold 2, the ones that are not there. What am I saying? This is my closing stock. This is what I opened with. Opening stock. That is the reason why This closing stock here is a minus, because we had what we had in the morning, we added more, but we remained with this one. Therefore, after working out that, you get what you actually sold, because that's what you want to see. What we actually sold is what you're interested in, to know what profit we made after you sold. After all that, what you do is you now do expenses. So here, you list expenses. You know you have the list of expenses. Expenses are too many. Expenses are too many. So, but at least we can list around 10. You can list around 10. But before even expenses, let me add for you, sometimes we have what we call other incomes. So I will add other incomes. In a business, we have other incomes. So these incomes include rent income. That is posted here. Rent, all incomes are posted here. We have rent. Sometimes we receive interest income. Interest probably from fixed deposit. We put here. We also receive discount received. Discount received. We post here. We also receive commissions at times. So we have commission. Commission received, you also post here. Something else is decrease in provision for bad debts. This is one of the tricky things. Provision for bad debts. We can call them doubtful debts. In case we have a decrease in provision for doubtful debts, the decrease itself is considered an income. After you're done with this one, what you get is something called gross income. The gross income, I will take this plus all this, you get a very big figure there, gross income. Let me continue with my format again, with the format of this. Let me continue with the same format. I am continuing. So, if my board was continuous, I would have continued from here. Let me carry this figure to this. I'm just continuing, so let me start with gross income. I've carried the last one here to this side, so that's the way it was appearing. So from here, after getting gross income, we less expenses. We know our expenses. We know expenses. We can have bad debts. Bad debts are expenses. They are posted here. The expenses are posted in that column. Increase in provision is an increase in provision. Increase in provision of doubtful debts. When you talk about increase in provision of doubtful debts, it's an expense. However, decrease in provision is an income. Okay? Here we have rent expense. This column is meant to make adjustments. For instance, if we had overpaid rent, we would adjust here, say, less advance payment, overpaid rent, less overpaid rent, and overpaid rent is what we call less prepaid. If they have prepaid rent, for instance, we make adjustments, then we post this minus this, I post the final figure here. What am I saying? For instance, if the rent was 100,000, and you paid 120,000. It means you have overpaid by 20,000. So you can't record and say your rent was 120, even though this is what you paid. What you take is you take what you paid 120 minus 20,000. This will tell you your rent was actually what? 100,000. Your rent you are supposed to pay 100, but you paid 120. It means you overpaid by 20. How do you do that? Take what you paid minus the overpayment, you know your actual rent. For any expenses paid, overpaid, or paid in advance, you minus and you adjust in this column. We can get electricity, for instance. Electricity is an expense. Sometimes you might find you have paid not entirely some part of the bill. So that means this is what you paid. Then you add what is accrued. Accrued expenses are added. For instance, you paid 60,000, but you still have a bill of 20,000. That means your total bill for electricity was what? You add the accrued. Accrued expenses are those expenses that have not been paid fully. So for you to know the total bill for a certain period, you must add what has not been paid. Let's continue. So that is about accruals and prepayments. Now, we can also have what we call the interest paid, or loan interest. Let me just be specific, loan interest. Loan interest is an expense. Let me assume there is no accruals or prepayment. I was just using an example to show how to adjust for prepayments. Loan interest. From the loan interest, we can also have commissions paid. Commissions paid, this one expense. We can also have something like stationery. I post here. I can also have something like depreciation. I post here. I also have discounts. Discount allowed. Discount allowed is an expense. Discount allowed is an expense, but discount received is an income. Okay? So, I think we have captured everything here, the opposite. So, that's okay. We can also have salaries and wages. We can also have motor vehicle costs. Motor vehicle expenses, not cost. Motor vehicle expenses. These expenses for motor vehicle, I'm not talking about the cost incurred to purchase a motor vehicle. This is the cost incurred to run the motor vehicle, e.g. repair and maintenance of the motor vehicle. Fueling of the motor vehicle is an expense. We also have repair and maintenance for buildings. Repair and maintenance is also an expense. We also have other expenses like legal expenses, legal fees. We also have audit fees. Sometimes you need to be audited. We also have audit fees. We also have marketing, advertising cost, advertising. Advertising and marketing costs, sometimes you can have that. We also have something like water and sewerage. Water and sewerage. There are so many expenses we can add. Things like telephone or what we also, telephone bills, yeah. We can also have things like postage, the money paid to post office. There are so many expenses that we can write. There are so many expenses. We have written 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. We have so many expenses we can write. We also have carriage outwards. The money you incur to carry goods to your customer or to offer after sale service is an expense. carriage outwards. The list of expense is endless. Sorry, the list of expense is endless. So when you are done listing expenses, you take the total of all this, you post here. The total of all that you post there. When you get the total, you take this gross income minus the total expenses. It will give you net profit. Net profit, or what we call net loss. Net profit or loss. But if it's a loss, if it is a loss, this figure will have to be in bracket. If it is a loss, the figure will be in bracket. If it is a profit, the figure is not in bracket. That is how you do an income statement. Thank you.